Good evening, everyone. My name is Dante Thompson, and I am an insurance broker with Insurance Group of Nevada. Again, my name is Dante Thompson, and I am an insurance broker with Insurance Group of Nevada. I know it's been quite a while since the last time that I made a video such as this, but I wanted to touch on something that's very important, and this particular subject is being reviewed by our federal government, our federal legislation. And that is the Obamacare health insurance program. Our President Donald Trump, he released in his weekly address, he discussed how the Senate is currently in the process of approving the new repeal and replace of the Obamacare health insurance plan. Well, it's not a question or a doubt that the plan needs to be modified. That the program needs to be modified. We have to agree that the costs are increasing. The deductibles are increasing. The quality of our medical care is slowly declining. Our deductibles are increasing. Our co-payments are increasing. Even the share responsibility, which is the tax payment that you will owe if you fail to have medical insurance for any period of a calendar year. So we can all agree that the deductibles, premiums, and co-insurance on our health insurance plans are increasing, and our selection of medical doctors and medical facilities are slowly declining, meaning less choices for medical care, which is a bad thing. Currently, right now, the share responsibility for the 2017 health plan year and tax plan year is $695 for each adult, $347.50 for each child. These are for each person in a household that does not maintain minimum essential health insurance coverage. And then again, the maximum limit that can be charged is $2,085 for the share responsibility. Again, this number goes according to the lowest cost bronze plan. So even if you do nothing, at least pick a bronze plan. At least you have something. It might cost you maybe $50, $70 a month. But again, at least you have something in case, God forbid, you do need to go to a hospital or attain a required surgery. At least you want to have something in place versus to nothing and just paying the tax bill mandate. Our president did mention a couple of interesting things. He mentioned one thing about turning over the health insurance from the federal government back to the states and freeing up the federal government to be able to do more with the monies that they're using for the subsidy payments. Well, in one of his remarks, he said that people on Medicaid would have the ability to purchase a private insurance plan with federal assistance. Well, where is that money coming from? And so basically what I got from that was, hey, you got these people on Medicaid, women, men, families, children, everyone may be on Medicaid, and you want them to purchase a private insurance plan. Well, what's the real logistics that where the federal government is going to provide assistance? Is there going to be a certain level? I'm surely there is, and I'm surely it's going to be a rigorous process. One of the most interesting things, and again, what prompted me to do this blog video, was when our president stated about the health savings accounts. And this is one thing that I noticed that he was really consistent from the very start of his campaign trail. When he talked about health savings accounts, he stressed health savings accounts. Now, the health savings accounts been around for many, many, many years. It's just that the very few have taken advantage of them. Health savings account serves as a a tax-free medical account, meaning you deposit a certain amount of dollars each month or each week or out of each one of your paychecks into a health savings account. The money is then considered tax deductible and then tax-free when you use it for medical expenses. Those medical expenses could be for like deductibles, co-insurance payments, or even glasses or dental care, anything health related. Our president said one important thing where he wants to double the contributions that an individual is allowed to make to their health savings account. Again, doubling your contribution to a health savings account, this is people who are, I would say, making between $75,000 to $100,000 a year at minimum. So he wants to double the contribution to the tax-free health savings account, also called HSAs. But one important thing what he said about those accounts, and was the ability to pay for health insurance premiums using your tax-free health savings account. That's very interesting because years ago, that wasn't never an option. So if that's the case, and our president is going to make that happen, I think that's a remarkable change for the repairing a failed Obamacare health insurance system. Again, I think Obamacare health insurance system is a phenomenal system. I myself took advantage of the Obamacare health insurance system. I think it's phenomenal, especially self-employed individuals, or if you're just getting started, especially our new Uber and Lyft drivers. You're considered self-employed, 1099, meaning you're responsible for your own health insurance. Well, being self-employed, your income goes up, down. Sometimes it's very difficult to tell from day to day. It really depends. One thing about the Affordable Care or the Obamacare system, it allows you to obtain health medical insurance at one rate 1 month, and then another rate another month. So if your income for that month is going to drop below a certain amount, you get more of the tax credit. If your income increases, you just get less of the tax credit. Again, I tell my clients to make sure you report, my self-employed clients, each month make sure you keep a track of your monthly income, your gross monthly income, and then that income should reconcile what was reported with the health insurance marketplace. Again, one thing my office does is we assist clients in updating your monthly income, as well as any 6-month annual income and even your 1-year annual review. So if you still need health insurance or you need to enroll, the open enrollment period is closed. So the only way to apply for a health insurance plan is if you qualify for a life-changing event, meaning your plan was terminated. And let me clarify, if your plan was terminated with the exception of paying for premiums, if your plan was terminated because you didn't pay the premium, then that's not a life-changing event. Hopefully that clears that up. Other than that, so a life-changing event could be something like you move to Nevada or Las Vegas. That's a life-changing event. You change jobs. That's a life-changing event. Another one, you have a baby, get married. Those are life-changing events. If you do not have a life-changing event, unfortunately, you would not be able to apply for a tax credit via the health insurance marketplace. You would, however, be able to apply for a health insurance plan directly with the insurance company, and those plans are subject to a 90-day waiting period. People ask me, well, what are you supposed to do for 90 days? Well, we have supplemental coverage or short-term medical insurance coverage that can provide medical insurance coverage and give you the quality of care that you need for those 3 months while you're waiting on your major medical plan to start. Unfortunately, those plans do not meet the minimum essential coverage of the law, but they are health insurance plans. And because they don't meet the minimum essential coverage of the law, the tax mandate still applies. They do not excuse you from the tax penalty. Again, those plans can be ranging anywhere from $30 per month all the way up to about $400 per month. Again, so those are another alternative for medical insurance or medical care. Again, my name is Dante Thompson. I'm with Insurance Group in Nevada. Please feel free to view our website where we have a Insurance Insights, also known as the Insurance News page, and also our blog page where we, from time to time, we post about different topics that's going around in the insurance industry. And that includes life insurance, health insurance, Medicare insurance, business insurance, and most importantly, auto and home insurance. Just to give you a tidbit, auto and home insurance rates has increased by 10 to 15%, and depending on the carrier, your insurance company may have increased your rates And again, this is due to the fourth quarter of last year, of 2016, the end of fourth quarter, when the insurance companies reported an enormous amount of losses or claims in Nevada. Because of that, they submitted to the state of Nevada Department of Insurance, to our insurance commissioner, a rate revision. The insurance commissioner approved those rates for those insurance companies, and again, they range between 10 to 15% from what the rates were prior. So it is recommended that you shop with an independent agent at this time when your policy comes up for renewal. Again, we are an independent agent for personalized insurance. We represent Progressive Insurance Company as well as Safeco Insurance Company, who is a member of Liberty Mutual Insurance Company. Again, my office, we also outsource for different other insurance agents who also have access to broader markets to attempt to obtain the lowest rate for our customers and our clients. Again, even if we can't earn your business by being the lowest, we will try to work with you to get you the lowest insurance possible. Again, if you have any questions, feel free to contact our office at 702-996-6434. Again, the number is 702-996-6434. And my extension is 1000. Again, my name is Dante Thompson, and I am the broker with Insurance Group of Nevada. Thank you, and talk to you soon.